Hi, it's George Nordhaus, and I want to welcome you to Monday morning. I always say that this is different today. Well, this really is different today because you're going to learn a lesson about something that you've heard about but probably don't know much about. That's something called gradation. The presenter is Deborah Miller-Failer. Now, Deborah is the president of a new company that's coming in, and you'll hear a lot more about, called INA Connect, and that stands for Insurance Needs Analysis. And that new program you'll be going to be hearing a whole lot about. Deborah was, when she started her business, she was with State Farm for a long, long time. And then she went, with a basic company, and then she went with agent and who became the top agent of State Farm, Cosmo Conti. She was number 2 with Cosmo Conti's agencies, both in Cleveland and then out in San Diego when they moved. She was number 2. She was really involved in so many things that have to do with marketing and management, and but particularly the internet and so many exciting things. Cosmo was the number 1 agency for 14 or 15 years, a long time. Can you imagine? Of State Farm, the biggest company, personal lines company in the world. And she was number 2. So, and when State Farm went paperless, they used Cosmo Conti's agency, and guess who took them paperless? Deborah did. She came back to Ohio, became a consultant for auto owners insurance company. She wrote a lot of stuff for them. Then she built her own business, an automated system that I won't tell you about right now, but you'll hear more about. At any rate, when I was coming up with a new project called INA, and you'll hear about that soon, I went to Deborah, and that was a good move because she really knew what it was all about. And as she began to develop it, she said, well, one of the major aspects that we're going to have for any agency, that any agency needs to know, is gradation. And I said, wait a minute, what's gradation? So I guess, Deborah, I'm just going to open it up to you. And what's gradation?
Well, thank you, George. It's good to talk to you again. I have to say, every time you give my bio, I feel older. So
okay, I'll cut it shorter next time. Oh boy.
Okay. What is gradation? Well, gradation is a process whereby an agency can analyze a number of different criteria having to do with their clients. And so therefore they can determine who are the top 20% that in fact give them 80% of the revenues. And it is something that you would hear about within the accounting firms. They seem to do this quite frequently, but I'm not sure that the agency system has really caught on to it. And if you really want to focus on productivity, in my opinion, you must grade your clients.
All right. Let's talk about it. Explain it.
Okay. Well, let's talk about why it's important for an agency to grade their clients. First and foremost, we know that working efficiently and working proactively really focuses on the bottom line, and it brings profit to the agency. But the whole key of understanding who are your top quality customers give you the ability to really focus your resources on those people. And when I say resources, I'm not just talking about your marketing dollar. I'm talking about your staff time and helping your staff be directed proactively towards the folks that really are your bread and butter, those individuals that truly you would miss revenue-wise if they would leave you. I've just listed a couple of things here, and basically we want to be able to focus the quality of the relationship on these top-tier folks. But then on the other hand, you're going to find as you grade your clients that that low tier is somebody that perhaps you may want to try and find a new home for.
That's another story. Okay, I like these things. This is interesting. You know, what's interesting about it is you're really talking about what is the number one potential, number one profit-making situation for agencies, and that's retention. And we all know that, but we all feel it, but it's not that easy to identify. So, and where we go from here, the irony of, we're going to have somebody next week talking about this very, not the same thing you're talking about, gradation, but on retention, and that's she's one of the top. Well, you'll hear about it next week, but it's all about retention. It's Lynn Thomas of 21st Century Marketing and Management, and it just ties right in with this. Go ahead. I'm sorry.
Oh, that's great.
Couldn't
No.
Okay.
I think she has some tremendous insight, and I'm sure that your followers will really enjoy what she has to say.
That's right. So it's all about retention.
Let's get started on how we might be able to help those who are listening think through the process of developing criteria for grading. The first thing that I want to establish is that when you think about grading a client, it's not always the premiums that they bring in that is what you should focus your attention on. And in fact, when you think about the whole of many factors that play into the relationship, you're going to really find in just a few moments after we discuss some criteria that the revenue is really only a very small portion of the whole evaluation process. Now, it's important that every agency think about what is that quality client for themselves, because what they have in their demographic region and in their population base and so on and so forth is certainly going to be different than any other agency. And you may even find the differences within your own staff. So I really do think that the very first thing you need to do is to establish what does your A client look like in your agency. Now, what I've done here is I've given you some objective and subjective questions that you may want to think about as you're working together as a team to determine what does your A client look like. For example, does this client have a potential for continual growth? Does this client provide high quality referrals? Is this client profitable? Of course, we probably would also focus that within the equation of the premium. But does this client pay on time? What is the longevity? What is the retention of this particular account? Now, there's other factors that I really think that are important too, and that is, how does this individual work in terms of the relationship that you want to form with them? Are they receptive to your coverage suggestions, or do they just dismiss anything that you truly feel that is in their benefit? Will they allow you to work from a consultative relationship? Because that really is what the whole value add of the independent agency system is about, is having a consultative relationship and truly looking at the anticipation of what's in the future and trying to protect the individual for that. What type of reputation does this individual have in the marketplace? Are they honest? Do they work with ethics? And truly, what is their ease of doing business as it would relate to your staff? And that really is a big one. So I would recommend that the first thing that agencies do before they even pull the first report is to establish the criteria of who is their A client.
And it's everybody together. I would assume it's the CSRs, the producers,
yes,
everybody.
Everybody. In fact, I think anybody that has any direct input with a client would be valued in this conversation, and it's also going to help them in the buy-in because when you focus on something like this, it's really wise for the agency to take this data and do something with it. And I'm going to conclude today's talk with some suggestions on what they would want to do with that. But, of course, that's going to require the buy-in.
Okay.
Now, on the flip side of knowing who is your good client, you need to identify the criteria of your bad client. In other words, do they have reoccurring payment issues? Are they difficult to work with? Are they disrespectful? Do they use foul language? Do they expect you to jump when they call and say, I have a need? Do you find that perhaps they operate in the gray rather than giving you honest, forthright information? Is this an individual who wants to micromanage and call continually to make certain that you're doing the job that they believe you're being paid for? And perhaps their business is going in a different direction than how you want to take your business in the future. So again, what we've done here is we've identified our good and our bad client before we have even gone to the data, because data is not going to give you the relational aspect of client gradation.
You know, I've always heard you say, Deborah, too, that on this bad client situation, that you could ask your CSRs and every one of them could come up with 5 clients they just as soon not have, huh?
With a shadow of a doubt. And I'm going to tell you right now, when you take a look at the value of your staff members and the value of their expertise and their time and what they could be doing if they perhaps had a little bit more energy in the day, if they didn't have to work with those clients that truly drag them down, it would make a huge difference in the bottom line over a year.
Yeah. Okay.
And that's why I believe that it's very important, as we've already discussed, get your staff involved, get them into a buy-in and ownership, and the first thing that I believe is important is that when everybody comes together to decide these factors, there are no wrong answers. And so it's important to really work in harmony before you even begin the sorting process. Now, we're going to get to how do we run reports and see what these people look like. Now, the good and the bad criteria is something that is going to be thought through as you will look at the reports that we're now just going to be generating. And so I believe any agency management system would be able to extract the following types of data. Now, why are we asking these things? Because we know that there are certain sectors within the community that perhaps have higher value, that would be considered more of the ideal marketing. Certainly we want to look at the number of policies and the account value that an individual has. We don't want to totally discard the amount of premium that they're paying you. How long have they been with you? What is their credit score? How many claims have they had over the last 3 years? So this is really the base of the information that I would suggest an agency sort. Now we want to try and sort this data in household, because the household really governs the entirety of the account. You may have young drivers, they may have a policy on their own, but most likely mom and dad are paying for that.
Well, now you're talking about personal lines here, obviously, but the same thing I would imagine it works for commercial lines, doesn't it? We're just using this as an example.
Yes, absolutely. It absolutely would. In fact, it would just be necessary for the agency and their collaborative time together to really analyze perhaps not the subjective and the objective criteria, but this specific report running criteria.
Okay.
Now, what are we going to do after we have volumes and volumes of report? I'm going to help you go through some sorting. And you're going to sort your data only 4 times, but in those 4 times you actually are going to extract data into separate reports that in essence will pretty much become a class of itself. Okay, the first sort is you want to sort based on the number of drivers, the number of vehicles, and the home value. Now, once you get your data in this format, in using the number of drivers, or especially the number of vehicles and the home value, the fields that are empty for each of those categories are going to be extracted out of the first primary report, and I want you to create a second report, and this is for potential cross-sell clients. So that is the very first thing that we're going to do. The second sort is we're going to take a look now from the remaining data that has not yet been extracted and put into a separate report. We're going to take a look at the number of claims in 3 years. And what we want to do is we want to peel off those individuals that have had 2 or more claims from this master list and separate that data and put them into a separate sheet. Because what those individuals may represent. And again, there's no way to definitively, without looking at this data and looking at the clients and understanding the circumstances, say we've made a good decision in this category. But for the purposes of a beginning, all of those who have had 2 or more claims are going to be extracted from that first list, and then they are going to be put into a second individual list, and these are going to be your potential risk management folks. Now, I think it's important that when we go through the final analysis, as you're looking through all of these data, you keep in mind, especially in this category, are these potential bad clients? Because we don't have any way of determining the bad clients unless we can actually take a look at all of these different lists based on various criteria. Okay, so now we have 2 sectors that have been removed from the primary list. The third sort is going to be the total number of policies, the account value, and the home values. Here what we're doing is we're taking a look now of individuals that have rounded accounts with you. They've only had 1 claim in the last 3 years, and we want to identify those in that top tier of the number of policies, the highest account value, the highest home values, because these folks now are potential for being your A clients. However, once we have this third sort in place, I recommend that you run 1 more criteria based on having the information from the third sort. And the fourth sort, and this is your final sort, is based on zip code. Because every agency knows that they have, whether or not it's 10 or 20 zip codes within their region that are absolutely the finest marketing target. And so what we want to do, after we have already sorted the folks that we know are potential A clients, we want to really bring that cream up to the top and pull out the zip codes that we know are ideal. And then once you have identified that group of people, you want to cut them out of that list and then move them into the third individual list, and that's going to be for your potential A clients. So you have removed a good bit of data, but you still have some data. And so what I'm going to recommend that you do in the remaining data still would be individuals that are rounded and they are loss free, but they may not have the number of accounts that you would like. They may not have perhaps the value of home that you would like, or they may not have the zip code that you would like. And those are folks that, in my opinion, would be your B classification. So let's take a look at these 4 lists now that we've determined. We have our potential A clients, and these are the folks that, again, we have just sorted out and they're in your prime zip codes. We have the remainder of that loss-free rounded account section. We have our potential cross-sell, and then we have our potential risk management.
Now, when you say risk management, you're not talking, again, not talking about commercial, because that's usually, you're talking about personal risk management, really, on this particular one, yeah.
Yes, we're talking about the potential profitability or the loss on the account,
the
claim frequencies.
Okay.
Because the whole philosophy of gradation is not just to see who your best clients are, but also to take a look at who needs to have some rehabilitation to try and move them into a more profitable state for the agency.
Got it.
Okay, so now you've got these 4 classes that we have tentatively assigned a grade A, B, C, or D. This is now when what you have identified as your objective and subjective criteria. Let's say that you have identified 5 key components within that the entirety of the list that I gave you there, and you want to now look over these lists and match up to see if there's anybody that needs to be extracted from a list or perhaps even added to a list with a special note of exception. Now, the same thing is going to apply for your bad clients. You need to take a look at the criteria that you established for those that you really feel are weighing the agency down, and base that then and extract those folks out, and those then become a fifth list. And you're going to see in a minute that I am going to recommend that the agency consider firing those clients. And I know that that's probably a word that most agencies don't like to hear, but nonetheless, when they take a look at what they can do with their top tiers in developing the retention and the referrals and so on and so forth, the loss of that income will be very quickly made up. So the last thing that we want to do, at least in the information that we have for today, is to help the agency think about what value this list is going to bring to them other than just knowing who these people are. Well, I recommend that an agency proactively cultivate relationships, or proactively approach a client with the potential of finding a new home for them, or proactively going into some type of discussion on deductibles or other types of measures to try and bring up the profitability of the account.
Where is that D, the D one, the one you were just talking about a minute ago?
Well, the D one we're going to get to here on the next slide.
Sorry,
the D
push you over there, but because you had me counting. Go ahead.
Yeah, okay. So we actually have now a total of 5 different lists. Once you have applied your criteria and you know those folks that you would really like to consider rehoming, you've got your A list, which are your advocates. You've got your B list, which are close to your advocates. They need to continue to be fostered as far as that relationship to move them up the loyalty ladder. Both of these 2 top tiers are ideal to ask for referrals, for testimonies for your website, or testimonies for any type of published material. Your C clients are those that have growth potential. Definitely those are the ones that we extracted initially that did not either have the auto or the home. And of course, most every personal lines of client should have an umbrella. And even as you take a look at your high value home categories and your A clients, definitely those folks you should pursue for umbrella, and continue to think about how you can cultivate and bring a number of additional resources to those people. Okay, so then we have our D client, and these are the folks that perhaps we need to talk about, or perhaps even find a new home for if we cannot rehabilitate their unprofitable state. And of course then the last category is to release those clients and help them to find another home.
You know, I was telling you the other day that I talked to an agent that does this all the time, and he sells the ones he wants to get rid of. He doesn't get rid of them. He just sells them to an agent down the street, and I think he gets one and a half times commission for every one of them. So that's not bad. It takes away all the cruddy work, and people are causing them more problems and makes money in the process. I thought that was brilliant. Anyhow.
Well, it definitely is worth thinking about, and especially for the young producer whose time is so limited and they're pulled in so many different directions. I know that it is painstaking to think about releasing a client, but if they want to be able to focus on cultivating a sound, solid book of business, they have to release some of those people that are just dragging them down so they can go after those that are going to build them up.
Well, and of course then, I know you have been working on this, and with me, I know for the last 2-3 years, and you've got the whole system worked out to where most of this can be done automatically. It takes some time and effort and everything else, but it's, if you have some guidance, it sure does work better. I can see the A, B, C, and D situation, and then and then you really have to differ in your own mind how much time you're going to spend, how many touches you're going to make on each one of them, and so forth. And of course, that's what you're doing, right?
Absolutely, absolutely. And I would strongly recommend, once you have all this criteria established and you have all these different lists, find an open cell within your agency management system where you can indicate that grade. and maybe even put in the note factor what day you ran that profile. Because when you go to working proactively and creating this communication that will go out to these groups, then you can do your sort and your filters based on that grade.
All right. Well, Deborah, thank you. This is good. It was just a basic. I wanted you just to be basic, and that's what you've done. And just to give people the basic idea, everybody's talked about this, and occasionally you see an agent who's really done it very well, but it's going to be a lot more help for you that's coming. They can contact you. You're president of Vinyl Links, I know, and you'll help them, I assume.
Well, thank you. Thank you. I appreciate that very much. And my desire is to see the independent agency system prosper and become as profitable as possible.
Well, we can't ask anything more than that. So we'll be back at you with more stuff on this, on the retention and the relationship situation, and we'll be back at you guys. So stay with us on Monday morning. Don't forget you can always go back to email. Email is continuing to expand now with a lot more really exciting things in it. So please feel free to go back there. Deborah, thank you again. I know that we'll be doing more of these down the line and working to get people to understand how